Well, good morning. Welcome to the Data Explorers Securities Lending Market Update for Monday the 10th of November. I'm Ed Oliver. Well, very positive this morning. Markets up overnight and in Europe as well as a result of an announcement from the Chinese government that they're injecting $586 billion into an infrastructure spending program. Mining stocks have reacted very positively, as you'd expect, to that news, up to 10% in some names this morning. HSBC, though, are down. They've announced a further $4.3 billion write-down on their exposure to US housing market. So not so good news for HSBC down this morning. Other news, as a bailout expected from Italy this week. They're expected to announce plans to provide around 20 billion euros in capital to their banks. That will help them raise their Tier 1 capital ratios as a result. So announcement of that expected some point this week. Other news as well over the weekend. Sovereign wealth funds have announced that they're less likely now to invest in Western paper, particularly Western financials. Obviously, over the last few months, we've seen sovereign wealth funds come in and really inject quite a bit of capital into Western financial institutions particularly. That appetite likely to now have been a lot less than it was in the past. That's a point we'll be discussing this week at the Spitalfields Advisors Sovereign Wealth Central Bank and Middle Eastern Investors Securities Lending Forum in Dubai, so lots of discussion about that over the next few days. And another item that was talked about in the press over the weekend was to do with Land Securities. The Sunday Times reporting that Land Securities has dropped its demerger plans as losses soar. They're expected to lay bare the full extent of the commercial property bloodbath this week when it puts plans for a demerger on ice and unveils a shock 20% drop in the net value of its assets. So how's that affected the securities lending business? Well, we've got a slide here that shows that up until fairly recently, only 2% of shares outstanding were on loan. But then around the 23rd of October, that soared up to 6%, just for 1 or 2 days before dropping back to just under 4%. So certainly seems to have been a viewpoint on Land Securities over recent days. That equates to about 25% utilisation of shares available for loan. But again, we'll be keeping an eye on Land Securities over the next few days just to see how the lending markets react to these stories. Analysts say that Land Securities should be in a strong position to reassure investors over its debts because its loan facilities are more flexible than many of its rivals and it has plenty of headroom. So mixed stories over the weekend on prospects for Land Securities, but that's a stock we'll be keeping an eye on this week here on the market update. That's all for today. We're back again tomorrow morning with more news. Other than that, have a good day. Thank you.